All right, let's dive in. There's a sweeping new bill on the table from the House Ways and Means Committee, and it's looking to fundamentally change how Americans and businesses are taxed. We're talking about a proposal that is absolutely packed with big tax cuts and even bigger policy shifts.
So, to really get a handle on what this bill means, we're going straight to the source, the official summary from the very committee that wrote it. Let's break down what's actually inside.
Okay, this thing is a beast, so to make sense of it, we're going to tackle it in 5 parts. We'll start with the big picture, then zoom right in on what it means for your personal taxes and then for businesses. After that, we'll get into some major policy shifts before we hit the bottom line.
All right, first things first, let's look at how this proposal could directly impact your wallet.
So a core goal here is to make the 2017 tax cuts permanent. As you can see, without this bill, tax rates for a lot of people are set to jump back up in 2026. This provision, well, it aims to lock in these current, lower rates for good.
Now this is where it gets pretty interesting. The plan for the standard deduction is basically a 2-step. First, it would make the current, larger deduction permanent. But then it would add a temporary extra boost on top of that. That's why you see those numbers in the provision column for 2026 are so much higher.
Families with kids could also see a temporary boost. The proposal would raise the child tax credit up to $2,500 per child. That's up from the current $2,000, and it would last through the 2028 tax year.
But it doesn't stop there. The bill also rolls out a bunch of brand new tax breaks. The idea here seems to be providing some targeted relief for specific groups. Think workers who are in tips and overtime, eligible seniors, and of course, families trying to save for education with 529 plans. And then there's something completely new, a savings vehicle with a, let's say, politically resonant name, the MAGA account. It actually stands for Money Accounts for Growth and Advancement, and the idea is to help kids save up for major life expenses down the road.
And to get these accounts started? Well, a pilot program would give a one-time federal contribution of $1,000 to every eligible child born between 2024 and 2028.
Okay, let's shift gears now and talk about the business world. This bill has some major changes for everyone, from the small shops on Main Street all the way up to the big global corporations.
A huge chunk of this is all about keeping certain business tax breaks alive that are set to expire. This means letting companies write off the full cost of new equipment right away, bringing back a similar immediate deduction for R&D spending, and making that really popular tax break for pass-through businesses permanent.
The bill also wants to kick off a second round of something called Opportunity Zones. So just as a quick refresher, this is a program that offers tax incentives to encourage people to invest in economically distressed areas.
And you can see right here how this proposed round 2 would be different from the original. It's not just a simple extension. The program would run longer, but the rules would actually get tighter. You've got a narrower definition of a low-income community and a new rule that says at least a third of these zones have to be in rural areas.
Okay, now this is really important to get. This bill isn't just about cutting taxes. It also aims to make some major shifts in national policy, especially when you look at energy and trade.
Yeah, terminated. One of the biggest policy U-turns in this whole bill is the proposal to end a whole bunch of clean energy tax credits. The plan would speed up their expiration, basically shutting many of them down after 2025.
And wow, the list of credits on the chopping block is pretty long. We're talking about tax breaks for new and used electric vehicles, for charging stations, and a whole range of energy-efficient home upgrades. Things like new windows or solar panels.
Now, for the bigger stuff, the large-scale clean energy production, the bill takes a slightly different approach. It's not an immediate termination, but a really rapid phase-out of the available tax credits. And this phase-out would hit some of the heavy hitters. We're talking about major credits for clean electricity, for nuclear power, and for green energy manufacturing. The value of these credits would shrink each year before just disappearing completely by the early 2030s.
The bill also turns its attention to the massive investment funds, the endowments of wealthy private universities. It would toss out the current flat tax on their investment income and bring in this new tiered system. So what does that mean? It means schools with more money per student would face significantly higher tax rates.
And believe it or not, there is still more packed in here. The bill would make the cap on state and local tax deductions permanent, it would end a duty-free status for many small international packages, and it would terminate the IRS's new free tax filing program, just to name a few.
Okay, we've gone through a ton of individual pieces. So what's the big picture? What does this all really add up to?
Well, the final piece of the puzzle, and honestly, maybe the most contentious, is about the national debt. The bill calls for increasing the debt limit, that's the total amount the government is allowed to borrow, by a massive $4 trillion.
So if you boil this entire thing down, it really rests on four main pillars. First, extending and enhancing the 2017 tax cuts. Second, creating a slate of brand new tax relief. Third, a sharp reversal on clean energy policy. And fourth, setting up new rules to raise revenue from some very specific sectors.
Make no mistake, if this were to become law, it would be one of the most significant rewrites of the U.S. tax and energy code we've seen in years. And that, of course, leaves us with the big unanswered question. In today's political climate, what kind of journey does a proposal this ambitious now face?